Good morning, everybody. Good morning, good afternoon, good evening. Welcome to the Capital Hungry live market analysis stream. Can I get a sound check, audio and visual check from the Zoom chat as well as the YouTube audience? I'm just waiting for some people to get in here and then we'll be starting our usual flow and process. Everybody's good? Yeah. Check 1 2, check 1 2. You're still holding GJ? Very nice. What was your entry area? Yeah, we're gonna be starting shortly. Let's just let people get in here. We'll be running through our normal process. Until people get in here, take the time to of course read the description of this chat and the description of this webinar, sorry. And read these stream reminders you're gonna see on your screen right now. People always at the end of the webinar, hey Jeev, can you teach me how to do analysis? Hey, do you have signals? Hey, do you mentor? Hey, do you account manage? Hey, this, hey, that. But a lot of people can't help themselves is the main issue in our world. You know what I mean? Let's do a little give and take. So if you go through and read through the stream reminders and the description, you'll get resources to all of the Capital Hungry News Twitter, the Capital Hungry Free Telegram channel, the Capital Hungry YouTube channel here itself. Right? And please, for anybody that joins the stream later, you know how a lot of people join late, they just come in after London's already opened up and it's already 40 minutes into London session, begging for signals, asking for contact information. Just remind them that this stream is recorded and that you can always rewind it and just come back to the start of the webinar here where I'm sharing all of this contact information. Yeah, if you guys are watching the Asian session stream, those GJ buys are continuing very nicely. So hopefully we can get a nice retest through London session and some continuation to the upside. I know the private channel is already eating on those buys. Can we get some W's in the chat, private channel, just to flex on the YouTube chat? Here, I'll put it. Yeah, show them the W's. All right. But anyways, this is not direct financial advice. You guys can all feel free to ask questions related to technicals and fundamentals regarding the overall financial markets. But I follow a sort of process with these live streams. The first thing we do is go over our psychological and mental reminders. Then we understand what economic events we have throughout the night and throughout the day. Then we take a quick peek. At all of our macro and micro fundamentals that are impacting the markets. And then obviously we go through our analysis on gold, GBPJPY, GBPUSD, Euro USD, USD CAD, and of course the US stock market, US 30 Dow Jones. Okay? So I would prefer if you guys save any analysis or charts or questions until after I go through that process, because I will be covering my intraday viewpoint fundamentally and technically on those pairs one by one anyways, right? So you have all the contact information right on front of your screen there, the stream reminders. I'll just get the Zoom chat out of everybody's way. And then just so you guys can see it yourself, this YouTube channel itself is a great resource if you're trying to learn about the currency markets, stock markets, fundamentally and technically, and some very key core concepts. You have webinars on scalping, intraday trading, higher time frame analysis, various psychological concepts such as the evolution of a trader, fundamental concepts like the central banking system, higher time frame analysis, lower time frame analysis. You got fundamental timelines I've done of pairs. You have everything here, plus these live sessions themselves, which run for hours. Plus I've started doing these little market updates, which can only be about usually 30 minutes to 50 minutes long. You know what I mean? I did this Asian market update and this New York market update where we were calling some great gold buys from the 1700 lows, right? The change with the streaming time is just due to the daylight savings. You know how the daylight savings time change? So London Open is actually at 4 a.m. Eastern time now. Right now is pre-London hours, 3 a.m. Eastern still. This is Frankfurt German Market Open, and then London Open itself is still in another hour. So we're just going to be doing our prep for London and New York session and doing our analysis. But yeah, Capital Hungry Twitter, you guys can see here, just post headlines throughout the day and night. It's not as many headlines as the news terminal to the left side of your screen. That's for the private members only, but it's still a much better resource for economic news data compared to any mainstream media like Forex Factory, Forex Live. It's a lot faster and there's a lot more volume of headlines. And then the Capital Hungry free Telegram analysis channel. Holy tongue twister right there. All right, so those are the main resources to follow. That's free for you guys to follow and use and right at your fingertips. And I understand through these streams 99% of the time, everybody gets a big dopamine hit because we usually end up following some analysis that helps us make some money in the markets. But our goal as traders and our I guess our scope as traders is not just to do analysis and keep executing on trades. It's also to stay as emotionally neutral as possible, stay as disciplined, patient as possible, follow our trading plans, pre-planned analysis, follow our risk management plans, focus on the long-term vision over short-term satisfaction, and keep emotions out and avoid crashing your account. All right? The number one rule in the markets, the first rule in the markets is survival. Learning how to survive, learning how to actually stay afloat in these vicious markets, these vicious ocean markets, right? Half you guys can't even swim and you're trying to come in these oceans, you know? It just doesn't make sense. But anyways, don't forget about those mental reminders. Before we jump into it, some of the economic events we have overnight. We don't actually have too much economic data overnight, but we do have the Eurozone CPI figures at 6 a.m. Eastern. The main point of focus for US equities and US dollar movement, as well as gold and our secondary US dollar pairs, is of course the FOMC and federal interest rate decision later in the afternoon. It's already Wednesday, obviously. Sorry, no, my streaming schedule didn't change. I still am going to be streaming Tuesdays and Thursdays. It's just yesterday I had issues trying to connect to the YouTube servers through this XSplit broadcaster. So I just ended up doing just some Zoom sessions with the private chat, and I thought I'd make up for it today, you know? So it ended up working fine today, and here I am. But usually the streams are Tuesdays and Thursdays London session, you know? But anyways, so the main focus is the US federal interest rate. If you guys have noticed, a lot of our US dollar pairs such as GBPUSD, gold, Euro USD, US dollar against the Canadian dollar have been primarily ranging just to start the week off, right? This is more than likely because investors are on the sidelines for any US dollar movement, waiting for the Federal Reserve sentiment. So we're going to be seeing pretty much, I think US dollar pairs might range until the actual Fed sentiment itself, where it's going to be heavily dependent on if the Feds have a dovish tone or a hawkish tone. I personally think they will bring some short-term US dollar strength. If you guys backtest any of the Fed interest rate impact on the markets technically, 8 times out of 10, they're usually saying something that is bringing a short-term boost to the demand of the US dollar and giving it a short-term quick spike up, which obviously can have a negative impact on your pairs like GU or Euro USD or gold, and then a positive on a pair like USD CAD, right? But we don't have too much to focus on overnight. That is something we're just going to keep in mind and prep for later on in New York session. And also we have at 8:30 a.m. Eastern the US building permits data. At 8:30 a.m. Eastern also the CAD core CPI, the Canadian CPI figures, consumer inflation figures. 10:30 a.m. US crude oil inventories, which is every single Wednesday, right? Yes, the Feds aren't cutting the rates or anything. Nobody is projecting a rate cut, but that's not the issue. Whenever you have central bank speakers speaking and these guys dictate the value of the currency or potential stimulus plans to come or what they're looking to do with the economy moving forward or how they see inflation, their comments, their tone, their perspective of where they see the economy going forward is extremely important for investors' decision-making process with U.S. equities or the U.S. dollar in the case of the Fed interest rate, right? So the prediction of them cutting the rates or holding the rates or raising the rates, all that shit is like sort of common sense, right? Most of the time they're gonna keep rates as is, and they already signal out rate cuts well ahead of time. So you're more focusing on what the actual tone of the speech and their economic outlook is, right? Are they still seeing issues in the labor market? Do they still see downside risks with COVID? Do they still see potential lockdowns to come? Do they still see issues with inflation still increasing and becoming worrisome? If you see more negative comments than positive, then that's going to change investors' outlook in the short term because you have the Federal Reserve bringing some short-term negativity. But if they still say everything's gung-ho, status quo, you know what I mean, then it might have a neutral to positive impact. So it's very important about what is actually being said. But anyways, some key fundamental points and we're gonna review these points as well. Global market sentiment and investor behavior from the macro perspective is still very optimistic. Martinez, you got me with that comment there. We're seeing some short-term negativity regarding specific vaccines. Nothing that's shaking the macro. It's a Gatorade, man. Take it easy, guys. You guys got sick. You guys are sick and twisted people, man. It's just a Gatorade bottle. Man can't stay hydrated. Right? We have seen some short-term negative comments regarding specifically to the AstraZeneca vaccine that is potentially leading to blood clots, but nothing else that's shaking the overall vaccine optimism and market optimism. We're also seeing some short-term negative headlines that there's potential for the US to go sanction Russia for meddling with the previous elections, where there's already been hints at a potential Cold War to come between Russia and the US or US and China. And that we're still focusing on overall global vaccine rollout is the main focus. A lot of the pandemic fear has been priced in. A lot of the countries are opening up out of lockdowns. Overall, when we go to our global stock markets across the board, what do you see? Buyers printing highs and continuing the bullish run to the upside. This is on the 4. Yeah. So you can see our global stock markets are still very bullish, showing investor confidence and optimism is still very high. Another confirming factor of this is the fact that our US dollar has been in bearish market structure and still relatively flat since March 2020. The Japanese yen, on a daily perspective, still relatively bearish standalone, where we know the US dollar standalone is the world's reserve currency and is a safe haven currency. The Japanese yen is a safe haven currency as well and still very bearish. The Volatility Index is just an index that reads short selling information in the S&P 500. So it's basically a fear and greed indicator of the North American stock market, specifically the US stock markets. Whenever there's massive short selling in the US stock markets, or dumping of stocks, as you can say, this is to signal that there is an increase in market fear. Because you know what the concept behind this is? Stocks only go up. So if there's ever massive short selling in stocks, something's wrong. You get what I'm saying? So if the VIX is extremely bullish, which like it was just during that March spike, it's the exact inverse of like the US 30. Like if you take the VIX chart and you take like the US 30 or the S&P 500 chart, it's pretty much the inverse technically. But it's a good trading instrument to watch stand alone because it still is a good fear and greed indicator. So just a quick look on it, you can see that it's clearly bearish. It's clearly going down to previous historical lows. Japanese yen is bearish. US dollars bearish. Global equity markets are still very bullish, right? So when we trade a pair like GBPJPY, which is a risk currency against our safe haven currency, and we know the UK stock markets are booming. We know the Bank of England's providing continuous support for the UK economy. We know we have optimism with Brexit and these individual political factors that have usually been a downside factor for GBP now becoming a positive because it's showing some optimism. And we know the Japanese yen by itself is bearish. Is there any reason to really sell GJ? Just from a fundamental standpoint, is there any reason to call a top on GJ? Is there any reason to anticipate a reversal? Is there any reason, if you were smart money, if you were an institutional trader, or if you were riding this market optimism, that you would want this trend buy trend to stop since March 2020, right? We have only had the transaction of buyers taking profits and exiting positions as new highs get created, and minor pullback phases and continuations to the upside. We either get an impulsive high or high created, a 50% correction creating a higher low at a support zone and demand area, and a continuation to the upside. Or we get a consolidation zone and liquidity zone generating in the market and a breakout to the upside. Right? There has been no fundamental reason or technical reason to try to sell GJ long term, or try to call a top, or try to call a reversal of this overall bullish trend, right? So what we were looking at through the Asian session with Mac, if you guys, any of you guys were watching me during Mac's Asian session, where we were calling the buys from 151.500, or the Zoom chat. What, Iron Man is here? Iron Man joins everybody's live stream that he can. Iron Man is a, I don't want to get Iron Man going, but Iron Man really needs any bit of attention he can get. It's okay, you know? Just let him do his thing. Right? So anyways, you can see what we had was very similar to like here. You get a high printed by buyers, right? And this happened to be at the end of February. You have an aggressive pullback that creates intraday bearish corrective market structure, but doesn't break higher time frame bullish market structure. As soon as you break above that corrective bearish market structure, right, you run with the trend right back to those previous highs as your first target, and you're looking to extend into new highs. Understand? So when we are looking at this here, we had something, what's the difference? We have had buyers extend into new highs, print new highs on GJ. Not like all-time new highs, but you get what I'm saying. In the trend over the last 8 months, this is a new high being printed since the March crash, 2020 crash with COVID, right? At this new high, you have profit taking by some buyers. liquidating positions, exiting out of the market to reap some of their rewards. Nobody stays in the market forever. It just wouldn't make sense, right? As buyers exit positions, the only way they can exit positions is if there's a sell order on the other end. You can't have a buyer without a seller, right? Just like a hedge fund working with a bank on the opposite end. So as these buyers are profit taking and exiting positions, this creates some lower time frame corrective bearish market structure from these high points. But this pullback from these highs doesn't break the higher time frame bullish market structure, doesn't break previous lows, and you can see this area would be higher risk, higher reward buys. But as we start to break above the bearish market corrective structure, we're looking to target right back to these previous highs, which we almost ran that play already now from which we were talking about at Asian session, right? You can see from the 0.500 psychological price level, our target is essentially about 60 to 70 pips up. So I am looking for a pullback now through London to even if we get a pullback to 0.500 again buys, or even if we get a pullback like halfway, then come back above 151.800 buys. All right. With how fundamentally optimistic the global markets are, with how weak the Japanese yen is, how bullish the British pound is standalone, I don't really have a reason to sell GJ besides I know some people play these corrective pullback sells, but listen, I have nothing wrong with people playing the corrective pullback sells, right? It's not like GJ doesn't have sell opportunities that take place that can run for hundreds of pips. The market moves in waves. You have these transactions of profit taking, price getting pushed down to better demand areas, creating these market waves. But I personally like to wait for the pullback and play with the trend. That is just my preference over multiple years of trading in the markets now. I've gotten burned too many times psychologically, taking a pullback sell trade, but then marrying that bias, thinking a full reversal is going to come and not taking profits and ending up like having price come back to my entry just due to my own greed and you start counter trend trading. It starts fucking with your bias. You start saying, oh, maybe it can drop further, or you know what I mean? I personally just let the pullbacks happen, let the consolidation zones get created, because there's only when you have a trending bullish market and you have that profit taking happening, the profit taking and the order flow generation happens in two ways, right? Either you get a consolidation phase, and like I explained this so much, I don't know why people don't get it, but like I guess it takes a while to click. Either you get a consolidation phase, which technically can fool a lot of traders because they start seeing a resistance. It's not like that, right? So you can have bullish market structure overall, and then have, instead of having all the time aggressive pullbacks, you can have these consolidation phases. You understand what I'm saying? Where these consolidation phases, they're not breaking the bullish market structure, they're not breaking previous highs and lows, right? It's just the market consolidating. You're seeing a bit of profit taking. You're seeing buyers enter the market until you have enough order flow to break out into a new high, right? Or the second way is, of course, what I was talking about, where you just have the cleaner trend where you're having an impulsive high created. You get a pullback to retest like a previous high or an area of interest, which usually is like a 50% correction. You know the Fibonacci retracement, the golden retracement, like the 50% retracement tool, whatever the fuck it is. That's where that concept comes from, is from that transaction of profit taking. And in this case of a bullish trend, when you have a upside move and a new high created, and then buyers take profit and sellers jump in to relieve them out of the market, there's been a technical pattern through history where this pullback usually is just a 50% correction technically of the impulsive move. This is where that Fibonacci retracement tool comes from. This is where it derives from. Right? You don't really need the Fibonacci retracement tool. You could measure the move, you could measure the size of the impulsive move just based on the pips. For example, let's look at this, right? So here, let's look at this area here, right? I'll show you guys. So you have a liquidity zone here and a low. From this point, you have roughly a 220 pip push to a new intraday high, right? And then from that point of a 220 pip push, you get a 100 pip pullback before having more buyers enter the market and then a continuation up. What is that? Your impulsive move was 200 pips. Your corrective pullback from that high was 100 pips. That's a 50% correction. That is the Fibonacci retracement tool. You don't really need to use that tool. You could just measure the size of the moves and start doing rough guesstimates with previous price sensitivity areas. You get what I'm saying? But anyways, I was just giving you guys those quick tidbits and examples. But what are these headlines? UK business minister says on Uber changes for UK drivers. Uber drivers are welcomed. Not much else going on there. All right. Anyways, so for GJ, I don't really have any reason to be in a GJ sell bias or see corrective GJ sells. I'm looking for a pullback. Even if we get a pullback to 151.500 buys, or if we just start to create a 1 minute support above 151.800 buys. Right? Because the overall market structure is still bullish. Our quarter points are still being used for buyers to enter the market and continue up. We're still having buyers print highs. We still have the range to at least target these previous highs, which is another 40 pips up, right? So fundamentally, there's been no reason to short the British pound. The Japanese yen as a safe haven currency has been bearish because you have investors taking money out of the safe haven currencies and putting it into the stock markets, with the markets being so optimistic and the support of the central banks. So it's best just to wait for these pullbacks and ride with the buyers, right? So what time is it right now, guys? So it's coming to 3:30 a.m. Eastern. We have the 30-minute candle closing here in about 2 minutes. It's still looking like it is going to close bullish. I may speak too soon though, but we're going to watch how this closes. So on GJ, we're going to keep it on the lower time frame chart now. So when it does come time to execute, we can look for our price action confirms the fastest. And we can also see some lower time frame bullish market structure developing, as from this point we did at least peak a new minor high, right? So we broke out of this bearish corrective structure that's been respected as we had that profit taking at new highs from 152, right? This pullback had sellers jump in the market and push price down to this more favorable demand area for buyers to re-enter the market from 150.800, right? You can see from this point we broke above that corrective bearish market structure and now have created a new minor high and are trending more bullish. As long as we respect this lower time frame bullish structure and above 151.8, I'm still looking for buys. I would only be looking for GJ sell scalps if we were to have sellers break back below 151.500. We could break back below our psychological price level and all of this price sensitivity to the left and this bullish market structure that's developing on the lower time frame. Does that make sense to everybody? I don't know what you're talking about, Ahmed Al Sultan. I don't count waves. I don't know what you're talking about If you want to send a chart and explain your theory, then I can see what you're talking about, Mr. Ahmed Al Sultan. I know somebody else sent a chart too. I'll check your guys' charts and everything else out after I go through all these pairs analysis. Does GJ make sense? As long as GJ, even if we get a pullback at London to retest this bullish structure, still bullish bias, buys above 151.8, buys if we retest the structure, buys if we break above 152. We're looking to target those previous highs. I'm only looking for GJ sells if we break below 151.500. All right? Does that make sense? Because I'm going to go do some gold analysis now. All right, gold. So, quick higher time frame fundamental recap of gold. I've said it a million times. We had a massive bull run from late 2018 all the way into 2020 due to multiple reasons. One was the initial, when Trump was elected, he came in and went hard with trade war, right? Going against different countries to try to bring more money in to the US via duties and tariffs. But everybody was seeing it as extremely negative and volatile, right? Because he was going after every country for tariffs. So you had the trade war, which brought economic uncertainty. Then we had the potential war on Iran. If you guys remember that Iranian general that got killed, and we almost had a world war pop off. And then obviously we had the pandemic markets themselves, which led to a massive increase in the demand of physical gold and a decrease in the potential supply and delivery, because all global mines and production areas were of course shut down due to the pandemic, right? So you had this massive inflation of price back all the way to new all-time highs at 2075. From this point, we entered more corrective bearish market structure and this descending channel, you can say it, right? So gold is still respecting this corrective bearish structure. But what you have to understand is the transaction between these buyers and sellers is when these sellers take profit at new impulsive lows created, you get very, very aggressive buy bounces on the higher time frame that you have to be mindful of, okay? And at this point at 1700, you can see we're also retesting this liquidity zone to the left, where previously we just had this massive continued upside run to correct. Now we're retesting that liquidity zone and this higher time frame bullish market structure. Okay, so when we're zooming in here and you compare some of the price action, look at when we had this impulsive low created, and I've talked about this 100 times, but I guess it doesn't hurt to talk about it again. See how you had bearish market structure respected by sellers for almost 3 weeks, right? You had sellers in control, sellers impulsive moves, consolidation zones or pullbacks, sellers impulsive moves. You get my point. All the way until you came down to this impulsive low where you finally had buyers jump in the market and break out of this market structure, do a pullback, and then continue up, right? Now, when you're looking at the market structure here on gold, sellers have been in control for the last couple of weeks, but we're finally seeing, and it's we're finally seeing at this very critical price point around 1680, 1700s, that we're having sellers exit the market, buyers jump in and break out of this bearish market structure and create a new intraday higher high, right? Breaking above previous lows to the left and previous lower highs here. Then you had this corrective pullback phase from this higher high that took us down to 1700. But you have to understand, from this low to this high was roughly a 600 pip upside move to create a new higher high. Then you had this 50% correction from this point and a higher low created, and buyers jump right back into the market to these previous highs again. right? So I am very iffy about selling gold. I know we're getting exhaustion at this previous high, but you have to understand the shift in market structure that we have right now. These white lines are your higher time frame historical price points, critical key price points, and very like larger intraday ranges to play. You can see the respect we had at this 1680 price point that finally broke above structure, gave this pretty strong impulsive upside move where we had this higher low created, right? And then buyers re-enter the market from this point and continue us back up. Now, remember, gold here is just consolidating. You can't say that this is like a massive sell-off is coming or gold is still bearish. It's just consolidating because you have to understand we're trading gold against the US dollar, and most US dollar pairs to start off the week so far have been in an intraday consolidation as investors are waiting for the sentiment for the US dollar that's going to come from the federal interest rate later today, right? The only way I would see safe sells on gold when you're looking at and dissect, and when we're first looking at that repeat of what we've seen whenever an impulsive low is created, right? That's just some basics you can see of how, just some technical observation. Even though it has been trending in this bearish descending channel, these upside bounces from new impulsive lows created can run thousands of pips, right? And you can dissect that when you zoom into these, when you watch how price reacted at these price points. You can see sellers were in control until you break out of bearish market structure and get a shift when you zoom into these areas. Right? Does that make sense to everybody? Because you guys remember for the previous 2 weeks, we were playing those gold sells all the way down to 1700 impulsive lows. Right? So now, I can't say that gold is melting. Gold is just consolidating. The markets are, most US dollar pairs have been consolidating. Look at Euro USD over like the last 15 hours. Look at US dollar against the Canadian dollar over the last like 20 hours. Look at GBP USD. Been fairly messy, just consolidating, failing to break previous lows. You understand? So I don't want to say gold is melting or gold is bearish yet. I would only see gold sells if we break below 1721. First, we would have to break below this consolidation zone and validate more buyers' exhaustion. Then we would need to have US dollar strength, which would primarily only come from the federal interest rate. But that's still like another 14, that's still another 12 hours away, 11 hours away. Right? So we would need to fail to break these highs, the previous highs created from last week, which obviously we haven't broken above yet, and lines up with our 1739 key level. How's that? Right? And then we would need to see candle closures below 1721 to break this bullish market structure that's developing and show more sellers pressure to revisit these 1700 lows and go deeper. Other than that, even if gold comes down to 1721 for a liquidity grab, it fails to break, I'm in a buyer bias and I'm looking for buys above 1739. If we can clear the previous high from last week, there's another impulsive move to create, like as we're moving in this bullish channel you can see here, there's another impulsive play where we can take advantage of that range, and that's almost like a 200 pip range. That's only if we have clean candle closures above 1739 though. Does that make sense to everybody? So even if gold does an aggressive pullback to 1721, I'm not going to take that sell. I'm going to watch the reactions at 1721. If we fail to break like we've seen here, I would take buy still. Or if we just continue to consolidate and fuck around here, but finally make our way above 1739, I would take those buys if we finally clear above 1739 as well. Because this is just consolidation, buyers generating in the market right now. As long as we don't break market structure, I'm assuming this is buyer side liquidity. Fair? Fair? Are those fair judgments to make? Right? Or another potential sell is this is some higher time frame bearish market structure that's been respected with that corrective structure we're watching. So another potential sell, a high risk, high reward sell, is if we come up to 1751. A big ball sell, another. So the only way I see sells is either below 1721 if we break below the bullish market structure, if we have US dollar strength from potentially the Fed interest rate, or if we come up to 1751 and fail to break. This is a high risk, high reward sell area right here. Other than that, I'm in a buyer bias. I even think we'd break above this area from these lows. You know? So to me, to a lot of people who just trade technically, they start to see this as a resistance. It can fool them. You know what I mean? And then they ignore the market structure. They ignore the fact that we can break above the previous high. You guys understand what I'm saying? If you guys want tips on entries, Calvin, come to the YouTube page and watch this scalping series I got. It's a 4-part series. They're like hour-long webinars. It'll talk more because these live market analysis sessions I do, I'm just doing analysis on pairs. We're looking at economic data. We're laying out trade ideas to execute on over London session and over New York session to come as well. We're looking at economic news in real time. You can see to the left side of your screen that's impacting our financial markets if there's anything. But I don't have the time to always repeat myself about like exactly what I look for entries. But what I do have that you can have right at your fingertips is all of these webinars on the YouTube page. Right? So you have the Scalping 101 series. And you have a ton of different webinars here. You have the Capital Hungry free Telegram analysis channel and the Capital Hungry Twitter feed. The other 50 plus secret golden educational webinars, that's for the private members only. They get access to the Capital Hungry webinar vault, you know? But anyways, yeah, so does the gold analysis make sense? I'm just going to put it on the 1-minute chart just to watch price action through London session. But yeah, I'm in a buyer's bias still, looking for buys if we break above 1739, looking for buys even if we pull back to like 1721. I'd only be looking for sells if we have clean candle closures and breaks below 1721. And if you patiently even wait for that, you're still looking to target this low that was higher low that was created, and it's a 200 pip range down, right? But that's the only way I'd be looking for sells. Otherwise, I'm primarily more in a buyer bias on gold and on GJ. You can see the 1-minute price action that just happened at the 0.800 PPL as well for a 10 pip scalp. But don't worry, we still have 15 minutes until actual London Open volume kicks in. I'm just going to put gold on the 1-minute chart just to see if we do break above 1739 or how we react. You can see it's just been messy ranging, but I'm just going to keep it here in the 1-minute chart. All right. So let's take a closer look at the dollar standalone. If you guys enjoy these streams, make sure you like and subscribe, you know, you share around the free resources, you share around the Capital Hungry social media. It's free to like, subscribe, and share. All right, let's watch dollar. So dollar's pretty mixed here. I think dollar's just gonna range until the Fed interest rate, to be honest. You know, so best we'll still watch it on the intraday time frames here, like on the 30-minute. This is the dollar index, but I think it's just going to be ranging primarily till Fed interest rate. Japanese yen is still flat though. Yeah, GJ gave a nice scalp from that 0.800 support there we were talking about on the new 30-minute candle. You guys catch that GJ buy scalp? I know the private chat caught that quick scalp in and out, right? Let's see what London brings if we can revisit those highs like we're talking about. So GU has been messy because we have the US dollar as a secondary, but I don't really need to discuss the higher time frames again, because we do understand that the higher time frames on GBP USD are still extremely bullish. Same thing as GJ, same thing as AUD JPY, right? Yo, W's in the chat for the GJ buys. Come on, guys. That was a quick, easy trade. 152 tapped. Previous intraday highs smacked, coming up. I told you guys in the market, I told you guys in the Asian stream for the buys from 0.500, and I told you guys for the buys from 0.800 on this new 30-minute candle. Can't even go wrong, you know? But don't get greedy. We still got, I'm just going to extend this lower time frame structure here so we can play with that on the 1 minute. Don't get greedy, because now we're coming to retest those previous highs pretty much on the dot, right? So let's see what London brings us. What I would prefer is breaking these highs and creating new highs now, right? But you can see when you zoom out and you want to stay objective, you can see that GJ can retest a high multiple times and fail to break. Multiple times. Look at this area, for example. Right? So when we're coming to this area now, you can already see that we got that trade range that we wanted to revisit these previous highs, but we've already had multiple attempts to break these highs. What would be ideal is if we could finally break out into a new high. Then we can extend these trades, we can look for a pullback and continuation right back up, right? Something like this. See how in this area here, we created this impulsive high, had an aggressive pullback. We peaked to this high again and failed to break still. Had a pullback, then finally broke and retested above that high to continue up. So now when we have this high created, we have to be very mindful. We don't want to start guessing that we're going to break the high. We want to confirm that we break the high. All right? Because what we can see is if we start to notice exhaustion here on the lower time frames, what can we potentially start to identify behind the scenes happen? We can potentially see profit taking by buyers. So if we see profit taking happen by buyers at these highs again, it will cause a pullback. That's all I'm trying to tell you guys, is just be mindful of that. All right? So let's just be, that scalp trade played out great. And did it make sense of why we were looking for the buys, the execution points? You can see the reactions right at the psychological price levels on the dot, and the great price action at 151.5 and 151.8, right? But we have to be very mindful of profit taking that can happen in this area again, like we've seen here before. Okay? If we break above it, hey, bless. I would love to see a new high printed tonight on GJ. I would love to see that. Is it going to happen? I'm not sure. Do I trade on hope? No. I'm not a loser. I trade based on what I see. All right, let's read some of these headlines quick before we jump into some of our GU analysis. But obviously, GU higher time frame is still bullish. We're still in a bullish bias on GU. It's the same concept as GJ, except the US dollar has just been ranging to start off this week as investors into the US dollar have been sitting on the sidelines waiting for the sentiment to come from the Fed interest rate later today, all right? But the concept is the same, that you have our risk currency, which is the British pound, against the safe haven currency, the US dollar. So we've only seen one thing. Buyers print highs, profit taking, pullbacks. That's it. Right? So even though we've had this pullback phase from these new highs, has this sell-off or this pullback broken bullish market structure? Has it broken previous highs? Has it even broken this previous low here? No, right? So what is this? It's simply a pullback. It's simply a correction. It doesn't mean there's a massive reversal coming on GBPUSD. It doesn't mean there's a massive sell-off. You can see from this corrective point, you can watch the bearish market structure on the lower time frames be respected, until we finally break above the structure and then create a double bottom at this previous low and now have buyers re-entering the market. If we have enough momentum through London, we should fill this range back to these previous intraday highs. The only thing that's iffy is the US dollar right now. And obviously we have the US dollar as a secondary in this pair, right? So we could have some potential ranging on our US dollar pairs until the Fed interest rate later in New York session. All right. But I am obviously in a buyer's bias on GBPUSD. I'm looking for a break above this medium zone and looking to take that like a 60 pip intraday trade range back to these highs and back to this higher time frame key level. What this shows me is this was a high printed. Buyers took profit at these highs, sellers jumped in. As sellers jumped in, this printed bearish market structure that was respected for about how long here? The bearish market structure was respected for about 2 weeks, right? The bearish market structure and sellers failed to break previous lows or the higher time frame key level or a back below previous highs to the left, showing me this is just a pullback. What is more evident that this is just a pullback is that we break above this bearish market structure and get this double bottom created at these lows, right? The higher time frame trade is what we're looking to target is what, guys and gals? What's the higher time frame target if markets remain fundamentally optimistic and the US dollar weakens? We're looking to target these previous highs again, right? But I'm talking about if we have enough volume and volatility through London session in New York and the US dollar weakens, at least we should be able to run this 60-ish pip range back to this previous high from last week. Right? On the lower time frame, this is only going to come if we break above this medium term zone we already had marked out. We've been watching around 1.39300, right? So even through London session open, if we just get a quick pullback that comes back into this range, just leave it alone, let the pullback and liquidity grab happen. And if we make it back above 39300, this is a great buy area to run back up. And this is what we were watching, is this lower time frame bullish market structure that's forming as well. So I wouldn't even be looking for GU sells unless we came below the higher time frame key level at 1.37800. GJ higher time frame levels I watch all the time, bro. The white lines are higher time frame levels. They happen to be pretty in line with psychological price levels. Nothing bothers me. Somebody says, do the higher time frame levels bother you? No, one minute time frame doesn't bother me. 12-month time frame doesn't bother me. Fundamentals don't bother me. No, it's not London Open yet because the daylight savings time change. Yeah, trust me, Michael, it fucked me up at the start of the week as well. We were watching at like 3 a.m. like, what the fuck's going on? So yeah, then I was like, damn, daylight savings time till March 28th. Then it goes back to normal. So London opens at 4 a.m. Eastern, which is in 5 minutes now. So let's just see how these hourly candles are closing. If you guys got to catch that quick 20 pip scalp back to those previous highs, that's great, right? Yeah, daylight savings times goes back March 28, right? So still nothing to execute on gold. We're only taking gold buys if we have clean 1 minute price action and momentum above 1739 previous intraday highs and higher time frame key level, or if we get a deeper retest to that bullish market structure and failure to break. And we're only taking gold sells below 1721 price point. GBP USD, I'm going to let London Open do its thing if we do this liquidity grab, and I'd be taking buys above 1.39300 if we create a lower time frame support, looking to target our 1.40 flat key level for an intraday trade, but at least try to scalp 10-20 pips on our way up and secure some partials as we start, if we have that momentum and buyer's pressure with GBP. Like I said multiple times now, the only thing I'm iffy about on GJ buys ran a lot smooth. Like obviously these little buy plays ran smooth, but I'm just talking about GJ is a lot more bullish just because of how bearish the Japanese yen has been, where the US dollar has just been consolidating and has had a bit more bullish pressure to start off the month of March, and then has been consolidating to start this month off, this week off, just because it's waiting for that Fed sentiment, you know? So we're going to see how London opens in 3 minutes. Euro USD. Let's look at Euro USD now. Now, Euro itself has had some more sellers pressure from negative vaccine headlines coming from Eurozone, right? And some short-term, obviously, indecision with the US dollar, okay? So obviously on the higher time frames, Euro USD, just like any risk currency against safe haven pair, has still been bullish. We've been printing highs, having, and this is a great example of something different. You know how GU and GJ has been doing more pullbacks and trending this way, where we have highs printed and then price pushed down to a demand area, then highs printed? This is a great example of the secondary option I was telling you guys. Here, you don't really get as aggressive of pullbacks. You get highs printed and then get these higher time frame consolidation zones, right? And then a breakout above the consolidation zone that doesn't break the overall market structure, and then continued highs printed. You can see this consolidation zone was quite large. It wasn't like an aggressive pullback. It was just a large consolidation zone between these highs and lows for almost like an entire month and a half. But as soon as you broke above there, you went extended into a new high, right? Just now, from this new high printed, we've had this more aggressive pullback to retest this previous liquidity zone here. So we're still very bullish on the higher time frames, and I'm still personally very bullish above 1.18 flat on the higher time frames for Euro USD as well. But we can have some short-term bears if we have US dollar strength come in, especially from the Fed interest rate sentiment. Because even if we go to revisit this previous low, you're looking at a 50 pip range down, right? So this is looking like a pretty favorable, like I would be more bearish on the higher time frames if we break below this previous low and break below 1.18400, right? Let's clean this up a bit too. And you can see that this higher time frame corrective structure is still being respected. Right? And even though we had this aggressive bounce, it failed to break back above that previous low. And with that short-term US dollar strength, like I was talking about, sellers have quickly jumped in the market. And yesterday, I think Fahad shared it in our Capital Hungry Trade room here. This stuff, European Medicine Agency, these headlines brought some short-term negativity to euro individually, where they're investigating a link between the COVID vaccines and blood clots, right? And these headlines were starting in over London session. And he shared these headlines here as well. I think that was a Zoo Economic Sentiment. I think it was just that one, those blood clot and those negative vaccine headlines from the eurozone. Right? So when we're looking at EU and we're observing the price action, if we can break below this 1 minute low, break and retest on the 1 minute time frame, I can see sells down to 1.8400, which is like a 40 to 50 pip range. Otherwise, otherwise it looks like we're probably just going to be bouncing in this like 25 pip range here, like how most US dollar pairs have been, you know? So keep that in mind. Keep in mind the economic events, right? The main focus for US dollar and US equities is going to be the Fed interest rate decision at 2 p.m. Eastern through New York, later in New York session. And those key fundamental points about that AstraZeneca vaccine and other vaccines showing signs of leading to blood clot, that was specifically in the Eurozone, which is having some of that seller's pressure on Euro specifically as well, you know? And as we're coming into London Open, or we just had London Open up now, don't forget your mental reminders. You don't have to execute right at London Open itself. You know what I mean? Patiently wait for your price action confirms at your areas of interest and the analysis we are discussing, and execute accordingly. All right? Yeah, I'm going to go to US 30. But before I go to US 30, like US 30, US dollar pairs, they're just ranging until the Fed interest rate. Like it's the same thing, you know? You can see it based on the intraday charts over like the last 15 hours on most of these pairs. But yeah, EU, watch if we break this 1 minute low here. So now it's London Open. Let's just zoom out and look at these intraday candles. So we still had a very bullish candle close here on the hourly. We just want to be mindful that it's at previous highs, right? But as long as we maintain that lower time frame bullish market structure and above 0.800, that psychological price level where we just took those initial buy scalps, then we're still in a bullish bias. All right? All right, so this is just London Open, a pullback right now. Let me walk you guys through my thought process. We have to be mindful because we're at a previous intraday high and we have not broken this high or created a new high yet. We're still respecting that lower time frame bullish market structure like we're talking about. We're still fundamentally and technically bullish, but I'm trying to confirm two things. Are buyers going to take profit and exit positions at these highs? And is that going to give us a deeper pullback? And I'm going to confirm that if we break below 0.800 psychological price level and this lower time frame bearish market structure. Okay? But as long as GJ remains above this bullish market structure, we're still in the buyer bias like we're talking about. I just wanted to quickly look at how the intraday candles are looking and just be mindful of that price position we're sitting at those previous intraday highs, where we have seen, like, for example, look at this. Okay, this is what I want to be mindful of, ladies and gents. So look at this. GJ higher time frame bullish, right? On the 1 minute is where you can observe price action, raw price action, the cleanest, and entry points the cleanest, in my opinion. You have this bullish market structure respected for like 150 pip run to create new highs, and it's respected for a full day, almost a 2-day period, 2 business days, until you finally have a break of that structure, which shows us profit taking. Okay, which shows me profit taking anyways, just with that technical observation. So now you can see from this high point, we had price come all the way to this demand area, buyers jump back in the market, and just like here, we have been riding the buys back up to these highs. So we started taking buys from 150.8 in the private chat. We started taking buys from 150.800 at the start of the week, after this pullback. Then like scaling in at the psychological price levels. Then the Asian session buy call on max stream that we both said was at 151.500, and then the quick scalp on this stream was the 20 pips from 0.800 to the 152 highs. Right? Now we're having London Open give us this pullback. We might dig a bit deeper than 0.800, but if we still respect this bullish market structure, then we are looking to just continue playing that structure up into new highs if we can peak new highs, right? So even like it's something similar to like this. We might get an aggressive pullback here, but if it doesn't break structure, we're still good, you know? It's just London Open. So that's what I'm observing here on the 1 minute. We've had a bit of a larger impulsive move from 0.500 from Asian session till now. Even if we do get a bit of that deeper pullback, but we don't break this lower time frame bullish market structure we're observing being respected so far, as we're printing highs in this structure, then we're still good, you know? And we can actually get even better risk versus reward buys in this area. But let's see how we react at 0.800 again. If you guys already caught that 20 pip scalp, most of you guys took profit or secured some partials and listened to me at 152, correct? Back to like the previous intraday highs. I know the private chat's gonna listen, but I don't know about the YouTube chat. If you guys are gonna be paying attention all the time with that. Right? Whoever took those 0.800 scalps, most of you guys took profit at the 152 tap, 20 pips, quick scalp in and out. And then obviously we were mindful of the London Open pullback itself. All right, good. So let's see. Let's just let now that you guys have secured some partials or you secured most of your positions there. Worst case, if you get taken out break even, who gives a fuck, right? Who cares? You're not going to be angry. You shouldn't be stressed, and you shouldn't have any emotional interception of your logical decision-making process. Meaning, if GJ comes to 0.800 again and fails to break, you can execute on another buy with an open bias, with like an open bias. You know what I mean? Completely emotionally neutral. You're not taking a revenge trade. You're not over trading. It's just the same trade executing again. If it does do that, but let's see, because it might give us that deeper pullback to like the retest this bullish market structure. So I want to be mindful of the reaction around 0.800. The next set of safest buys, is a break above 152, right? Which is around those previous intraday highs. Okay. Now, GU is just giving us that pullback. We're still going to watch that for execution points. If we can come above 1.393, that's a great range to the upside. But we have to be mindful of that US dollar indecision. Gold has been a mess waiting for the Fed interest rate. You can see, especially on the 30-minute. A lot of people, in my opinion, this price action is trying to bait in a lot of sellers. I don't know why I see it like that. It just hasn't broken structure yet, or like, you know what I mean? I only still see safe sells below 1721. If we come above 1739, we will look to execute on those gold buys. Do I think it's messy from 152 to 152.200? It can get messy as you're squeezing right into those high ranges, but like I said, as long as we still respect the lower time frame market structure and price action like we've seen many times before, why fear something we haven't faced yet? Let's at least go up to there first, you know? Unless we shift structure, I'm still gonna trust and respect the GJPPLs, the lower time frame structure, the fundamental bias, unless a headline comes out to shift it, or unless we break this structure and come below 151.5. But yes, we do have to be mindful of buyer profit taking at those highs. The huge... It's just from 1954 highs and 2075 highs. This 4-hour candle is still active for another 50 minutes. So this is a pretty critical candle if we still close below 1739. But still just ranging. I haven't advised anybody to touch gold in this range. I've only been looking for execution points at 1721 or above 1739 since the start of the week, and that hasn't changed still. I'm not gonna fight this shit. I just see stress here, you know? I just see stress growing right there, and get bad memories of when I used to be a retard in the markets. Whenever I get those bad memories, it stops me from doing stupid shit. It's like shock therapy. I've done so much stupid shit and lost so much money intensely within minutes, over leveraging or over trading or trying to flip accounts, or you know what I mean? That it's like shock therapy for me at this point. It's just like I throw up if I think of, you know what I mean? It's like fuck it. I'll just wait for the safe trades. All right, what time is it? It's 4:12. I'm not going to be running the stream as long as normal because I have to go to the mechanic in the morning, like normal North American market hours. You know, I'm still from Canada. I just like to trade London, and I like to be awake at night. I like night shifts, you know. But no, it's just a Gatorade. We got a cherry frost here, glacier cherry. That white one, Gatorade Frost. Trying to keep the electrolytes up. Yeah, but this isn't gonna be as long as usual. For anybody who's asking for more individual questions about entries on the 1 minute, or like what's a break, or individual stuff that's outside of analysis, because right now I'm gonna look at other people's charts and analysis, and then answer any questions, anything you guys want to do. But for you guys, don't forget, man, look at the Capital Hungry YouTube page. All these marketers, like my boy Daniel Savage, Q Banks, these retards, fucking Astro Forex, they just show cars. Mamba FX puts girls' asses in his thumbnails, you know what I mean? Titties and ass in his thumbnails. They just do all this clickbait stuff, and they get thousands of views. And I'm out here doing a Euro USD fundamental and technical breakdown, Forex trading, 21-minute webinar a year ago. getting 247 views. You know, like, how about I go fuck myself? Why do I even bother this? I'm getting it wrapped. That's what I'm doing with the Audi. I'm getting a 3M dark gray satin wrap with a ceramic coat after and carbon fiber accents. And then my rims are silver right now, but I'm gonna powder coat them black. But I never posted my car or any of that shit in my life. Nobody's ever seen that shit. You know what I mean? So look at this shit. I'd be out here like a Muppet. They'd be calling me a Muppet. Posting AUD-JPY. Fundamental and technical breakdown. Let me give myself a like. You know what I mean? Fuck me. I'm out here doing analysis on the monthly time frame. Looking at market structure. Looking at fundamental catalysts and shit. Looking at when I didn't even have a news terminal. I had to use oh, so broke. Had to use free resources. Fucking live squawk Twitter. Live squawk Twitter days. You know what I mean? No, my car, it's not, my car is old. My car's a 2016. But it's not like I'm paying payments on it. It's all paid cash. I'm out here doing AUD-JPY, fundamental technical breakdown, 249 views. I'm out here doing chart high, like a psychology webinar a year ago, only 1,000 views. Chart high psychology webinar, you versus you, 1,600. This is probably my most viewed video, I think, is the Scalping 101. Gold fundamental technical analysis, 755 views. You guys got me feeling like Iron Man. I'm just kidding, Iron Man. But Iron Man, you be only posting like 5-minute videos though. You can't say, you know what I mean? Your video's only like 6 minutes long usually. I'm out here posting chart high evolution of a trade. I'm out here posting the corrupt central banking system. You are a debt slave. Only getting 3,000 views. I have a bad mouth. If you don't like how I speak, then you don't have to watch me, you know what I mean? The markets are vicious. You ever been on a trading floor in a trading pit? You think they're speaking to each other slow and polite? Daniel teaches the streets. Who said that, yo? I'm out here posting educational webinars on crude oil, aka black gold. I was probably talking about the oversupply and demand here at one point. Oh, this is what we call the oil crash. I called the fucking crash on oil, and I only got 900 views. You know, remember when oil went negative? I didn't call it going negative. Don't quote me on that. But we did call a crash of oil from $50 to $10 a barrel. Full analysis ahead of time. Ask any OG in the chat right now. The webinar's right here, before oil even crashed. Watch the analysis. I called it from a spike up to $30 a barrel all the way down to $10 a barrel. And it happened exactly like that. You know what I mean? I'm out here doing a GBP AUD fundamental and technical market breakdown, getting 400 views. I'm out here doing the timeline of GBPJPY fundamentally, getting 1,500 views. But then you got our boys like this. Yeah, that was Krish's feed, trust me. 100,000 subscribers. Forex bought me a $2.2 million mansion. No, it didn't. No, it fucking didn't, you liar. What the This is just clickbait, man. This is just clickbait. I should just go fuck myself. Why do I even bother? Withdrawing $16,000 cash from a Bitcoin ATM. Who gives a fuck? Who gives a fuck, yo? Why does 70,000 mans watch this? Who cares? He has multiple videos of him withdrawing cash from a Bitcoin ATM. Is this man walking to an ATM withdrawing cash? Oh man, that's pretty funny. Holy, that's jokes, eh? Yeah, it's crazy out here in the Forex industry. People be wilding out. No, I'm sharing this because, listen, all you guys saying, oh, you're just mad. Oh, you're just angry. Oh, Jeeves, stop talking shit. Listen, you're the fucking retards who can't follow along anything I say because it's knowledge based, alright? If people actually watched value-based information on the financial markets, you guys would be able to follow along 90% of the information I share. Most of you guys be scratching your fucking titties like monkeys, like hairy monkeys, having no clue what I'm saying. Going in one ear, coming out the other. You know what I mean? Because you're probably part of the 70,000 people watching Mamba FX withdraw cash out of a Bitcoin machine instead of reading what an interest rate is. Alright? So go fuck yourself. Don't be telling me. You got... You know what I mean? Give yourself a look in the mirror and say, am I really learning about the financial markets? Am I really learning about economies, about investor principles, about markets? Or am I watching Mamba FX withdraw $16,000 cash from his Bitcoin ATM? It's up to you. At the end of the day, it's up to you. Alright, ladies and gents. Let's see what's going on here. We're still not executing anything on gold. We don't have any economic data for another hour and a half. Let's read some of these headlines to the left of your screen, shall we? Yeah, half you mans don't even know what inflation is. You know what I mean? You guys don't even know. You guys think inflation is blowing up your air mattress. You have no clue. Yeah. It is a fuck everyone type of world, you know? But at the end of the day, I like that on this stream that we can share information and share value and analysis, but also banter with each other like it's like a trading pit. Doesn't it feel like a trading floor here? Not actually, because most of you guys are sitting in your Fruit of Looms underwears behind the screen, but just come into the vibes with me right now. The trading floor vibes. Think about every time you guys come into this stream in the future now, Tuesdays and Thursdays. The stream's usually Tuesdays and Thursdays, right? But think about anytime you come into the stream Tuesdays and Thursdays, Wolf of Wall Street, not Wolf of Wall Street scammer vibes, but Wolf of Wall Street banter, shoot the shit, trading floor, Big Short vibes. You know what I mean? We can share analysis, we can share information on the markets, news, technical analysis, fundamentals, but also banter with each other on a human level. None of us have to put on a fake persona or try to be something we're not. That's the best, in my opinion. But yeah, let's read some of these headlines here. Pretty slow London session so far. GJ made that hourly lower wick. It looks like around 8.5. Should continue up here, but not too much going on so far. What is it here? 24 minutes into London session. No confirms to buy GU yet. We're buying if we break above 393, create a lower time frame support, then continue our way up. Yeah, you guys like that? You like, oh, King Broly, man. Thanks for the support, showing props. I like people like you. He said capital hungry called Biden winning the election and bombing Iran last year. You're right. I did. History repeats, you know? Thanks for the props, bro. Gold, we're not taking gold buys unless we come above 1739, or if we get a deeper pullback for better risk versus reward buys at 1721. 1739, if we finally break above last week's intraday high and we're in our higher time frame key level, it's just the range to the next key level is 70-80 pips, you know? Bro, you want to build your credentials? Credentials? This is just a free YouTube stream. You're welcome, Sakim. You're welcome. Told you, sometimes it's best just to sit out of the market some weeks. Is your private membership good for beginners, or is it better for when you have experience? You should at least have gone through babypips.com. Like, you should at least know the bare bone basics of babypips.com at least. I'm being serious about the baby pips. Like, it's like I'm dead ass. I wouldn't, like, if you don't know at least the bare bone basics, I wouldn't suggest joining Capital Hungry. Usually when people message me to join Capital Hungry, we'll have a quick little chat and I'll see where they're at. Cause I don't accept members all the time, and I don't accept, like, usually I've been capping it off at like 350, 400 members. Now it's been hovering around like 250, 300 members, which is still just like a good productive amount in my opinion. Cause I could easily do a sale or do some promotion to accept a shit ton of members at once and earn more money from just Capital Hungry, the service itself, but it fucks up my personal trading and it fucks up Capital Hungry, because you end up having the productivity and that you end up having that productive environment get destroyed when you have way too many people from different backgrounds, time zones, languages, financial backgrounds, knowledge levels, you know what I mean, that are just going at it or clashing. Egos, you have too many egos clashing. So a lot of these trading communities and a lot of these mentorships people join, it can become very toxic over time, especially usually half the time the person who's running the mentorship isn't even active. It just ends up being a bunch of people in some WhatsApp chat, Telegram chat, or Discord group talking amongst themselves every single day, and then the mentorship guy just sends like some Zoom link once a month, you know what I mean, or some like couple charts once in a while. Yeah, we're not taking anything on gold until we break above 1739 or get a deeper retest. We're only taking sells below 1721. GJ, we just executed on these buy scalps for 20 pips up to previous intraday highs. Analysis was shared during Mac's Asian session stream. Both him and I shared our viewpoints of what we were looking for and why, and through the start of this stream. If you guys don't mind though, I just gotta go to the washroom quickly here. I'm gonna fill up this water bottle, finish that Gatorade. My private channel versus Raja's mentorship, it's not even comparable. You talk about night and day. Raja has been involved in the trading community a lot longer, has very big influence, and has a large following, and is very good at what he does. But when you're talking about information on the entire financial markets, not the entire financial markets, but you know what I mean, then no, it's nothing like Capital Hungry. Sorry about that. But Raja knows there's about the amount of information that goes in Capital Hungry. Yeah, I was restarting the news terminal. Sorry, I thought it froze for a second, but it but it's still active. Restaurant? What are you guys talking about? Yeah, so let me go to the washroom quick though, and we'll come back. When I come back, I'm gonna be looking at everybody's charts. All right. No, my technicals are better than Monty's. Sorry, my technicals and fundamentals both better than Monty's. You can tell him that. Fam, you're talking about everybody thinks because I focus on fundamentals. Okay, you guys have to understand, in our retail trading space, right? Not a lot of people even talk about fundamentals. So when somebody talks about fundamentals, it stands out, right? So because I constantly talk about fundamentals, it stands out of what I talk about. But you guys have to understand that from a technical analysis perspective, coming from these PPLs that everybody's using, Monty uses psychological price levels, Raja uses them. Guess who backtested that and where that came from? When you see the higher time frame analysis from the yearly time frame and price action down to the 1 minute, how technical can you get? You know what I mean? So, and when you're talking about the description of market structure, who else has told you why market structure is printed how it is, with the actual transaction of buyers and sellers and profit taking, or the fundamentals that create the fundamental catalysts behind the scenes that print that market structure, right? So that's all I'm trying to say. They'll tell you that themselves too. It's not fucking hard to see. But like I told you guys, my videos and shit only got 400 views. And people only see the fundamentals because I talk about that often. Like for example, how could I show this? Okay, here. Before I go. All right. This is the Capital Hungry Educational Webinar Vault. All right. So this is for anybody who joins. The only trades that were called out and taken were 20 pip GJ buy scalp so far. That's it, nothing else. But for anybody who joins the Capital Hungry private channel, the first thing they have to do is go through all of these educational webinars. All right. So when you look at these educational webinars, you can see psychology webinars on trading psychology, like this human errors, fundamentals, a psychology webinar, fundamentals and technicals, analysis breakdown example, which is technical, psychology webinar, candle bodies and wicks, which is technical, trends, key levels and candle signals, key levels and trends remastered, market structure and road mapping trade ideas, technical, understanding lower time frame part 2, a psychology webinar, scalping 101 core concepts, scalping part 2, swing trade part 1, swing trade part 2, mapping, dissecting, and understanding market moves, economic data reports, measuring economic impact technically, market sentiment and volatility, tools to read market sentiment and volatility, how and why to do top-down analysis, key levels review of how to map key levels, pricing in concept, market environments, market correlations, market seasonality, historical analysis, central banks, U.S. debt and economy, gold educational breakdown part 2, oil educational breakdown, U.S. equity market educational breakdown, U.S. recession educational breakdown before the recession happened, U.S. corruption webinar, psychology webinar, trade war talks, Instagram live rants about the Iran war coming, Biden winning the elections, all that corruption. All right. So to say that GEV is just fundamentals is pretty disrespectful when half you guys can't even touch. Half you guys don't even understand. All right. You're talking about 3 to 4 years of studying technicals, fundamentals, and trading psychology now. These are just the educational webinars. Every single week, we still do higher time frame analysis, technical and fundamental analysis on pairs, London session recordings, New York sessions, trade ideas on intraday analysis. Every single day, every single week, Euro JPY swing analysis, like a couple of weeks ago, higher time frame gold analysis, higher time frame GJ analysis, higher time frame Euro USD analysis. It never ends. I mean, you're talking about doing analysis technically and fundamentally of the financial markets every single day, every single week, every single month. That load more button, this load more button is never going to stop. It'd be embarrassing if it stopped right there. The end. You're talking about from everything, from all of our London session recordings, all of our weekly recap videos, all of our intraday trade idea webinars, our individual pair analysis and trade ideas. You're talking about everything. Every single week, every single day, every single month. All right? So don't get it fucking twisted. That's all I'm going to say. Do not get it fucking twisted. Sometimes you got to toot your own horn. The load more button is not stopping. Here we go. Should be the end here. No, we're still going. You're talking about continuous analysis across different currencies, stock markets, commodities, precious metals, week after week, day after day, month after month. And you're saying people got better technicals than me? Fundamentals? The fuck you talking about? See when I told you guys the load more button? Yeah, guys, the only reason I'm doing this is because this London session is slow as hell right now. If you guys haven't noticed. US dollar pairs are doing jack shit. GJ has done jack shit since London Open. Gold is doing jack shit except ranging up and down 20 pips. And you get access to this news terminal. This news terminal costs more than most of your people's... I don't even want to say it, man. Fuck it. It's not... Why'd be rude? You get access to a news terminal. The news terminal itself costs $20,000 a year. With the routers, it's straight to the router's data terminal. You gotta pay the big bucks if you want to be able to share the information, you know? So all these headlines is connected straight to a data terminal. It's not Bloomberg. Bloomberg was a little bit too bougie for me. A little bit too expensive for me, you know? Had to go with the routers. But it's still expensive. It's still like 25k CAD a year. So you get access to that as well in the private channel. That's all day, all night. You get access to the trade room, which has session alerts, has key level price alerts, has other members share their analysis and information, where I share chart updates, send the Zoom session links and everything else, trade ideas. And then obviously the main feed is where we be sharing trade ideas every single week, going through a weekly flow every single week, mentor reminders every single week, daily mentor reminders. And on top of that, I still do these free YouTube streams, you know? So we be grinding out here. Indian PM Modi says pace of vaccination is increasing in their country. Obviously, because you guys are making so many of the vaccines. Fucking dickhead. This guy's trying to ban cryptocurrency. Modi, you guys remember that head? You guys in the? Are you guys in the? Are you guys in the free Telegram analysis channel? Do you guys see that headline that I sent when India is looking to make a law to ban cryptocurrency, and then obviously Bitcoin did that. Bitcoin did that pullback from 60k. You guys see that in here, the free analysis channel? Where is it? Here. India law would give cryptocurrency holders 6 months to liquidate all their assets. India to propose a law banning cryptocurrency, penalizing mining, trading, and the possession of it. You know? Before this, Bitcoin was at like a 61k high. Right? And then you can see from that point, it brought some negativity and uncertainty and doubt to the crypto market, because India does provide a lot of volume and market participants in the crypto market. Because India is a fucking dickhead country with their government, man. They don't want their people making money. They want to control every single thing. It's pretty much a dictatorship, to be a hidden dictatorship. And they to the external world, they try to make it seem like they're such a peaceful, don't get me wrong, Indian people are great, very giving, caring, peaceful people, you know what I mean, innovative, smart, but the Indian government is ruthless. The Indian government's absolutely ruthless. To the rest of the world, they fool like they're good, like they're a good government and they care about their people, but in reality, it's like a hidden dictatorship. Fuck the farmers, they fuck, look at all the currency, look at all the Forex trading restrictions there already is in the Indian government and in India, right? Now they're pretty much doing the same thing with the crypto market they're trying to do. because there's probably, you know how many people are making money in India from trading crypto with this big ass bull run that's been going on. So yeah. And you know what's interesting? If that law becomes if that law becomes official, right? And they actually ban all crypto and all Indian citizens have to liquidate their crypto positions, right? If they do it all at the same time, like right at the end of the 6 month mark, fam, imagine like the dump it's gonna cause on like Bitcoin. Entire country dumping their holdings of this thing, like cashing out at the very end. Imagine they all did it at the same time. But that'd just be interesting. But yeah. All right. Gold is just ranging. We're still not going to touch that. Gold has just been taking souls and burning through retard retailer accounts since the start of the week. GJ gave us that nice buy scalp from that 151.800, the 30-minute candle before London Open. How it still respected the support being created, and then gave us the 20 pip squeeze to 152 from that point. That was the only trade that was called out so far, and most people executed on it. If you got to catch that GJ buy either from the Asian session call at 151.500 from Maxstream when we were talking on Maxstream, or from 151.8, let's make sure you like the stream, get some W's in the chat right now. You know what I mean? Send a like, subscribe, share it around. Right? Other than that, EU didn't break the low yet. It's just ranging and bouncing around. GU, we're only taking buys if we come above 393. So watch that. We might get that potential squeeze as well if we break above. GJ, further buys would be if we break above 152 now. Other than that, it's a pretty slow London session. I guess most investors are on the sidelines waiting for that federal interest rate sentiment. We've seen most of our US dollar pairs, and even the US dollar itself has just been ranging since the start of the week. So there's no point fighting the markets or trying to have unrealistic expectations of monstrous trades when you're just having clear ranging markets in front of your eyes. We should get some cleaner moves after the Federal Reserve sentiment and interest rate decision. Yeah, don't forget that economic event. Yeah, you like that, eh? Okay, I'm just gonna read some of the headlines over the last couple of hours. If there's anything significant, there really hasn't been, but just anything to note, and then we'll start looking at some charts. If there's any trades to execute on over the next 30 minutes to an hour, we'll call them out and execute on those scalps. But other than that, London session is looking pretty slow, and then the stream's not going to be as long as the normal ones. But I will be streaming again tomorrow night, right? Like Thursday London session, I'll be streaming again. But I have an appointment in the morning, so yeah, I'm from Canada. right. I haven't done the Chart High podcast in a while. I'll do one with Raja actually. Wicks don't lie. I'll go to his house, and we'll smoke a joint on the weekend, and we'll do a psychology podcast. That's a good reminder. Thanks for the reminder. I'll write that down actually to do another Chart High episode. Get it? Chart High? Podcast? I like that. I like that. So I'll go to Raja's house on the weekend with Wicks Don't Lie, and then we'll record it at his house and we'll put it on my YouTube. I'm just quickly scanning these headlines to the left of the screen to see if there's anything significant. No, I never smoke while trading. That's that's not smart to do. It will impact your decision making process. In your free time, do whatever you want, you know what I mean? Or if you're doing analysis, or if you're just reading or some shit, or if like, you know what I mean? To each their own. But while trading, I would say nah. Don't do anything while trading. Drink some water. Stay hydrated, you know? Not too many headlines. If you guys want to start sending some charts, we'll check them out. GJ's giving us that deeper pullback straight to 0.800 is coming. Gold just messy ranging. I'm just going to go to the washroom though beforehand. So what time is it? It is 4:55 a.m. Eastern. We are coming towards some 4-hour candle closures across the board here. GJ still showing a lot of bullish price action and momentum here. Like with the following 4-hour candle, if it just creates a lower wick to continue up bullish through New York session, as long as markets remain optimistic and we can clear above previous highs around that 152 flat 152.2 area. But let's see how this 4-hour candle closes in the next 4 minutes 30 seconds. I'm gonna be streaming again on YouTube tonight at London session. That'll be a longer stream, but today I'm gonna have to cut the stream early because I got an appointment with my mechanic in the morning. I'm from Canada, so I just stream overnight and like to trade London session, and always traded London session personally. So, but anything I gotta do regular. Yeah, 3 a.m. around the same time like I sent the link tonight. Eastern Standard. So right now it's 5 a.m. Eastern, but I have an appointment with my mechanic at 9:30 a.m. Eastern. But I didn't get to sleep much yet. Yeah, so exactly. I just want to take a quick nap, then go drop my car off there, and then come back and probably send like a New York market update, you know? Yeah. But yeah, if GJ, as long as GJ still respects that bullish lower time frame structure we're watching, and the new 4-hour candle just creates a lower wick and still remains above the 0.800, even above 151.5, to be honest, I still see buyers active in the market to continue us up to squeeze higher. Safest buys would be obviously if we clear above these previous intraday highs that have been created. Once you break above there and you retest, you can have a nice move to a new high. Gold 4 hours just closing fairly indecisive and just pretty much in this range that it's been in. Still hasn't broken above that intraday high, but also hasn't broken above this bullish market structure that's developing yet either. The Fed interest rate is going to be the deciding factor later on in New York session, it looks like. GBPUSD is giving us that deeper pullback. I'd be looking for the new 4-hour candle. If it still maintains that bullish market structure we have lined up in the lower time frames, as we've had this double bottom at these intraday lows, I'm still in a bullish bias. But again, the only indecision we have with like pairs like GBPUSD, Euro USD, USD CAD, and the US stock market is the Fed interest rate decision, right? So if they bring strength to the US dollar, obviously we're going to have GBP USD just end up ranging and revisiting these lows and playing around still, right? I'd only be looking for buys after that pullback and continuation up. So we have these candles closing in about 2 minutes, these 4-hour candles, and then the new ones opening up. GJ is also giving that deeper pullback as well, this new 4-hour candle. To that bullish market structure we were talking about. GU, same idea. So we'll see what sets up for pre-New York hours in New York session. Yeah, I'll look at a few charts if you guys want before I go. But other than that, I do have to cut it early. I know you guys are very sad. I know usually I'd be running like 4-hour streams. I apologize. The hell? Yes, this is what we were talking about. Oh, wow. Thanks for the note, man. You passed your FDMO verification phase. You offered me some maple syrup one day. Wow. Thank you so much. Very interesting. Yeah, but we still, this is what I was talking about. It's very similar to like Euro USD to revisit previous intraday lows, but obviously you have NZD as a secondary here. But the one common factor is that Euro is still fairly weak from those negative vaccine headlines that we've seen come into the scene. So what you're saying here still makes perfect sense of you're primarily still in a sell bias. This would be a great risk versus reward, higher risk sells like you have labeled out. And I like how you labeled out the various trade risk thresholds, like your high risk entry, your medium risk, and your lowest risk safest sell area, obviously breaking below those previous intraday lows. So yeah, makes a lot of sense. And then you do have that little confluence of those negative vaccine headlines from Eurozone as well, which is providing some bearish pressure still. And I like how you identified this little consolidation zone and order block, because if it could clear below there, it's an easy range back to revisit these previous lows at least. So yeah, I always like your analysis. I like how you label out the various trade ideas, market structure, high risk, medium risk, low risk. Work some technical analysis on the ticker of life. Look at the 10-year chart daily. Some of you guys be on some next drugs during the middle of the night on these YouTube streams. But very entertaining. GJ coming right to that. Is this the new 4 hour as well? Coming right to did it end up closing bearish, the 4 hour candle? No, it didn't. We're still good. We're getting that retest right to structure here. So let's see how we react on this new 4 hour candle. Because as long as we still maintain the structure on this new 4 hour candle, it's just giving us that deeper pullback we were originally talking about. Same thing with GU here in the new 4 hour. Let's see how it reacts to this lower time frame bullish market structure that's been developing. I'd be watching reactions at these areas if you guys are still actively watching through pre-New York and New York session. And then if price comes back above 0.800 and the safer buys on GU still above 393. Euro USD just been ranging. I'd still be only taking safe sells if we have short-term US dollar strength and a break below 1.1885. Gold has just been ranging, failing to break these highs, but still I'd only be looking for safe sells below 1721 and you still be targeting 1700. Other than that, a failure to break 1721 is still a buy. Above 1739 is buys. You guys have your key economic events. In 1 hour, you have Eurozone CPI. That's a good reminder too for the guy who just sent Euro NZD analysis to keep a note out for that Euro CPI. If that data is good, it can cause a deeper pullback, possibly to your high risk, high reward sell area if you still maintain respecting that bearish market structure overall. Similar structure to Euro AUD, Euro NZD. And then US building permits at 8:30 a.m. Also at 8:30, Canada's core CPI, US crude oil inventories at 10:30, and then all the Fed interest rate at 2 p.m. Eastern. These fundamental points are still very much active. So far, markets have started the week off fairly slow and stagnant, just been ranging. We haven't really seen any crazy impulsive moves, right? But it's understandable, especially with our US dollar pairs, as investors have been waiting for that Federal Reserve sentiment and have just been on the sidelines. So we'll see if we get some volatility later in the week. And don't forget, just to be a smart trader overall, stay emotionally neutral when you're trading. Don't overtrade, over leverage. Focus on your long-term vision over short-term satisfaction or any short-term desires. And be smart. I gotta go, but I will see you guys again tonight. All right? the stream tonight starting at London. Make sure you come early because we'll be doing the analysis earlier, and it'll be longer tonight.